We now welcome on board Shenu Agarwal, the MD and CEO at Ashok Leyland. He's been waiting by. Shenu, good to have you on ET now. We're speaking after the GST rationalization. It's been some time now. Help us understand how the CV industry is taking the rate cut announcement, and overall, how is the sentiment across the industry? And also, will you be sticking to your earlier guidance or looking to tweak it now?
I would say that GST 2.0 has been very good to the CV industry so far, I can say, on two accounts. One is that, the rates have been rationalized from 28 to 18%. So that is a straight 10% cut in the price of the trucks and buses. But I think a bigger factor is that the GST rationalization has happened over a variety of categories of goods. And therefore, there has been a boost in the overall consumption. And therefore, that is supposed to enhance the freight demand. Now, once the freight demand happens, then there is definitely a pull from the fleet owner's side to invest into new products, new trucks and buses. So I think on two different accounts, this is really helping us quite a lot. September was a good month, but October was even better. I mean, in October, we saw that MHCV industry grew by about 7%, which is much better than what we have seen in H1 growth trends. And the LCV industry actually grew by 15%, again, much better than what we had seen in H1. So I think the initial indications are that CV industry is in good times now, post GS 2.0. H2 should be much better than H1 in terms of growth trends. Also, H2 is generally better for CV industry because a lot of infrastructure activity starts happening after monsoons. There is also a lot of government capex that starts rolling into the ground in form of various projects, etc. So we are bullish. We are optimistic about the CV industry.
Okay, and any revision to the FY26 guidance, Mr. Agarwal? You had mentioned mid-single-digit growth for MHCVs and slightly higher for LCVs earlier. Does that still hold, or would you at all change that?
Listen, it would be actually too soon. I think you give us another 30 days to really see how the market is behaving. What we can tell you now is that the sentiment on the ground is very positive, especially on the retail side or the small fleet operator side. I think the large fleets are also considering, the pros and cons of this. But overall, the sentiment has been really good. Like you said, in the beginning of the year, we said mid-single digit for MHCV and slightly higher for LCV. I think we should the industry should be able to beat that estimate. But to give you a specific number, just give us a few more weeks.
Right. And Shenu, on the defense side, you had earlier guided for a double-digit growth in FY26. Do you continue to maintain that view? And could you maintain that view, that is? And could you share your latest order book position too?
Yeah, actually, all our non-CV businesses are doing very, very well. I mean, beyond our expectations or plans. So defense in Q2 specifically has grown by about 25%. Our power solutions business has grown by 20% in NSR. And our parts business has grown by about 7 to 8%. Our exports has grown by roughly 35% in H1, right? So all these businesses are really helping us drive the margins and drive the overall business performance. Now, as far as FY26 whole year is concerned, we remain very optimistic about all these businesses. I think defense, we are definitely going to post a double-digit growth. Similarly, for power solutions, we are going to post a double-digit growth. Parts, we will continue to do better. Parts, in the last 2 or 3 years, we have posted roughly 20 to 25% growth levels. This year in H1, we are at 7%, but I think things should improve here on. So we are very optimistic about all the non-CV businesses that we have, including exports.
Okay, and on Switch India, you had targeted profit after tax break even by FY26. How close are you to that milestone, and what's the current order book status?
Yes, we are very happy with the way Switch India is progressing. I mean, we had laid out a 3-year roadmap for Switch India. Last year, we wanted to be EBITDA positive, which we accomplished. This year, FY26, we wanted to be PAT positive, which we have accomplished already in H1. And I'm very happy to say that H1 Switch India is PAT positive. Now, the next level target is to make Switch India free cash flow positive. and that target is for FY27. But now, since we have already achieved PAT positive, we will now work with even more rigor to achieve that target ahead of time, the FY27 target.
Right. Shenu, Hinduja Leyland Finance, that listing was guided within about 3 to 4 quarters. Any update on the timeline?
We are progressing very well on the listing front for HLF, Hinduja Leyland Finance. Last time we told you it will take about 9 months or so. So we are still hoping that in Q1, late Q1 or Q2, early Q2, the listing should happen for Hinduja Leyland Finance. Hinduja Leyland Finance, in any case, is growing quite well. I mean, in H1 also, it has shown growth of 20%. So we are very happy the way things are going, both in Hinduja Leyland Finance and its subsidiary, Hinduja Housing Finance.
And you've been working on setting up your own new modern plant in Lucknow. Is the project progressing as per schedule? How are things shaping up there?
Yes, that is actually ahead of time. I mean, when we did the Bhumi Pujan in February of last year, we thought it will take us 2 years. But I'm very happy to report that the plant is already under pilot production. Anytime within November or December, we will be formally inaugurating the plant. So this is, I think, a record for Ashok Leyland and possibly for the industry to come up with such a modern plant in such a record time. So the production will start anytime soon. The commercial production will start. Right now, we are just doing some pilots in the Lucknow plant.
Right, Shenu, great to have you on the show. Thank you so much for your time and highlighting how your quarter gone by has